Hi, Ashwin.
Good afternoon.
It's the beginning of the new year, and I noticed that the S&P climbed to 4,796 on the first trading day. Now, I'm reading this and I'm feeling really optimistic. The Nasdaq surged to 15,832. So what do you see the targets for this year?
We still see a target of 5,001 for the S&P this year and at least 16,002 for the Nasdaq.
Yeah, I have to say that, beginnings are always a little bit uncertain. And I want to take you back to the start of the pandemic in March of 2020. I know so many friends who got margin calls, and their blue chip stocks even were valued at next to nothing by their banks, because I guess everybody felt the pressure on, and there was this furious fear that was, transmitting around, not knowing how long and what next. So beginnings always have that sense of apprehension, don't they?
Yes.
So, I want to say that, I'm sure that these drops in stocks between now and the middle of the year, say in June, they will bring about buying opportunities, don't you think? So how do you see it going?
Yes, because this video is about buy the dip is still alive. And what you say is true, Desi. Any drop between now and June is a buying opportunity, unless there's a caveat here, unless the investor panics and says, I want out. We can't do anything about that. Having said that, because that's what you mentioned last year, that in March, furious panic and everybody was worried.
Yes.
I must boast a bit here. Had you contacted us and knew us, we would have assuaged your panic and say, if you can afford 20% risk, sit tight and buy more.
I know friends who were leveraged so high and they had no choice but to dump their stocks,
Because if you get a margin call for 3-4 million, for example, as a high net worth investor, and you don't want to pay that $3-4 million and you hope that the market will bounce back in 1 month, it doesn't work. That is why. This is the reason why. This is the reason why, Jesse, we always tell investors, even if you're worth 3, 4, 5 million, calculate your risk. How much risk can you afford? Because a margin call of 1 million for 1 month will not do.
I remember those days in early 2020 when the world was panicking. You were taking me on a shopping spree.
Yes,
and I was a bit scared, I must admit.
From 23rd March onwards, I started buying stocks for you. And the first stock that I bought for you, if you recall, is Microsoft. And look at Microsoft today. We bought for you Microsoft at slightly more than $200 per share. Today, Microsoft is $340.
What I mean to say here in this video is, you need to have that guiding hand, that steady, sure-footedness when something unexpected happens or when there's apprehension or uncertainty. That's when somebody like you becomes so important, so that we don't dump and panic. Like when the banks started making their margin calls, I know many of my friends just dumped even big names because they didn't know when it was going to bottom out, how long this was going to take. So when these dips happen and the buying opportunities, then it's a shopping spree with joy, not just apprehension and fear.
Yes.
So I want to know what your direction will be for retail investors, because this show is mainly for retail investors.
Yes.
How do you advise us going forward in the beginning,
Okay, so let me reiterate. Between now and June, there definitely will be a drop because over the next 2 months, the US Federal Reserve is going to hike interest rates for the first time in 3 years. Now, when that happens, and if markets drop on a knee-jerk reaction, like how they do,
do
not panic. Take out your wish list. Do not panic. Do not jump. Listen to what we say. Listen to our video, recall our video, and do not panic. Logic prevails. As we have said to you so many times, and we have proven so many times, logic prevails. The moment that happens, it drops. Put on your thinking cap and please prepare your wish list. And better still, if you can let us hold your hand, you will not have to panic at all.
So
Okay.
my point is always to support the retail investor,
Yes.
so that we start off strong and we end even stronger. And we not meaning to say mistakes are wrong. Of course, mistakes are part of growth.
There's no such thing as mistake, actually.
However, when it concerns money, money is so emotional, right? We don't want to lose it. As long as we can have the upper hand, we can. As long as we have the intel, we can be better. Correct. If we know better, we do better. That's what I mean.
Yes.
Yes.
Now, like I said, do not panic, because current pricing in the Fed funds futures market points to a 60% chance of a rate hike in March. Okay. And a 61% probability that the Fed rate setting open market committee will add 2 more rate hikes by the end of 2022. So don't worry, there'll be a lot of knee-jerk reactions. There'll be a lot of corrections. But don't worry. In fact, we are happy. Retail investors, if you can look at what we're saying and sign up with us, really, I'm not putting a hard drive here. You, like you said, you're concerned about retail investors. I'm going to use the word guarantee, but I can assure retail investors that if you deal with us in 2022, you are in safe hands, because we don't cut loss. We do not cut loss. We have a paper loss, but we do not have realized losses. It's only realized profits.
I always believe, Ashwin, that there's 2 parts to creation. The first one is out there in the world with the decisions that you're making and the people that you are interfacing with, and the broking houses you are dealing with, etc. But the more important part is the mindset and the belief structure of how you are going to, organize yourself, your principles, like Ray Dalio says, principles, and your culture, your philosophy, and just the way you operate by what you choose to think.
On this point, let me tell viewers, what you see is what you get. We don't have a two-face here. What we are advising you is what we advise for ourselves as well. I mean, we don't trade for ourselves, but we also have people who do things for us. Our philosophy is what you see is what you get. No double face. Okay, what I advise you is what I advise myself as well. Okay, as long as you understand the company.
I want the viewers to benefit like me, how I've experienced that transition from my banking days working with banks and not having control to now knowing better because I have better guidance. Yes. And at the same time, I'm more in control of my own choices. I think that is so irreplaceable, that sense of gravitas.
And let me one more thing, which I have to say this. You have control of your choices, and you don't have a bank breathing down your neck, advising you what to do in their way so that they benefit. I must say this. And we do not benefit. We do not breathe down the client's neck like that. We tailor-make our trading philosophy to suit the client's comfortability and risk appetite. The banks, I'm sorry to say this, the banks do not do that. The banks breathe down your neck. Buy this instrument, buy that instrument, buy this, whatever. I must say this.
Well, they do appeal to a different kind of client who maybe won't have the time to manage their own portfolio. So I'm sure they have a role to play. But I'm talking about the retail investor, not the institutional investor. The big guys, the billionaires. Yes, of course. They know what they're doing. They can leave it to other people to manage them. But I'm always focused. This series of videos is focused on the retail investor, specifically. Yes. And these are the people that I want to support with your with your expertise.
Yes. So what I was saying is the market is still seeing about three interest rate hikes. And listen to this, very important. Citigroup expects balance sheet reduction because they bought so many securities, right? So they expect balance sheet reduction to start in the first quarter of 2023. So let me explain to you. There'll be lots of corrections. This market is not going up in one straight direction. Okay? It may have gone up yesterday. Notice we're not even buying, Tessie. The market went up yesterday, we're not buying. We're waiting for a drop to buy more. So basically, this video is called Buy the Dip is Still Alive. This market will do a correction. It will not crash. So buy the dip. Do not panic. Buy the dip. It's a dip. It's a correction. It's not a crash. Because most importantly, every time when the market drops 2%, 3%, people always jump to conclusion and say, oh, it's going to crash. It's going to crash. It's going to crash. That will kill your portfolio. You will never make money as long as you fear like that. Because every time it drops 2 to 3%, I got clients calling me up, market's going to crash. Get me out. I say, okay, up to you. But I'm telling you now, learn to differentiate between what is a crash and what is a correction. This is where clients fail. This is the weakness of retail clients. I'm sorry.
So sometimes retail clients, because we don't leave it to others. So for me, speaking for myself, I try to educate myself by watching CNBC or Bloomberg and so on. I listen to JP Morgan and what they say. I listen to the Fed. So sometimes we can be thrown off track, but I know that if we were to design a portfolio, given our personal risk reward ratios, that bespoke, that customized trading portfolio, it has helped me so much. And this is what I want to share with the viewers.
And since you talk about personalized risk reward ratio, a nice guideline and a benchmark is 20% paper loss. If you can afford 20% paper loss in 12 months, it's very comfortable.
Yeah, paper loss, that is not realized loss.
Paper loss, yes.
Because you can always make that back.
That paper loss can convert into paper profit, realized profit. Now, since you mentioned JP Morgan, JP Morgan now sees the S&P, the 4430 to 4465 region as a new floor for the index. So watch out for this, retail clients. Do not panic. 4430 to 4465 is the new floor. Our target is at least 5,001. So I'm giving you the grid map now, free of charge here. I want you to watch this video and I want you to put us to the test and say in 6 months' time or 3 months' time, what you say was right. We are now giving you an insight into our philosophy and our brain for free.
Okay. So how do you want to end this video? Do you have a parting word?
Yes, I've got a very good parting word for people who are watching this video on the first trading day of 2022. Our algo is looking to fire the following sectors when the market drops between now and June, which it will drop. Or even after June, if it drops, we will be looking to buy these sectors. Listen carefully. Number one, quality tech names. Quality tech names. Write that down. Quality tech names. I'm going to go slow so that everybody can write it down. It's okay. We'll give you a tip here. We'll give you a tip. We won't mention exact names.
I'm going to add them to my notes. Yeah.
Yes. So quality tech names, and the subsectors for these names is artificial intelligence, hybrid cloud, Internet of Things, wearables, and hardware.
I hope that we'll, over the course of the year, the weeks, talk about these sectors individually.
Of course. Now, second one is EV, electric vehicle component makers. Notice, I'm not talking about electric vehicles per se. I'm not interested in electric vehicles. Someone's going to build these damn things, right? All these electrical engineers, all the parts, all the attachments, all the electronics in the car has to be built. We are looking to invest in electric vehicle component makers. Because these component makers are going to supply all your Teslas and Mercedes-Benz and BMW and what have you. Okay. Number three, electric vehicles will not work without batteries. For those batteries to work or be made, you need lithium miners. Our third sector we're looking at, if the drop comes, is lithium miners. We have made very good profits for our clients, even until today, since last year, in lithium miners. I'm glad to say very good profits. Number 4, we're looking at higher interest rates for sure in 2022. So we are looking to invest further. We've already invested. We're looking to invest further in financial institutions. Okay. And let me say again, the banks have really made us a good profit from last year. Okay. We've got a very good plan to invest in banks, which can make you at least 30% a year with 4 to 5% dividend yield every year for the next 10 years. If you want to find out more, it's not a hard sell, but sign up with us and we'll tell you what to do. Number 5, once the vaccine comes in, Omicron or whatever, because let me warn you, today, as I speak in this video, there's a new variant that's come out in France after the Omicron. It's called the B16402. What can I say? There'll be more and more variants. So we still see a vaccine coming out, even though how many variants? And the leisure industry ultimately will pick up. Why I'm saying this, those who can wait 12 months and those who have the money, start buying leisure industry stocks, because when the jump comes, it will be huge. The jump will not come now because everybody's scared of the virus. Nobody knows what's going to happen. But see, when a valuation is so low, only a matter of time. Yeah, it's like Warren Buffett. Warren Buffett will be buying now, I'm telling you, because it's only a matter of time. If you can wait 2 years, in the next 2 years, you think we can't solve this virus problem? Of course we can. Of course we can. Then we're looking at cyber security. As we use more computers, more metaverse, cyber security is going to play a very big role. And this is where there's a lot of money to be made. We are talking at least 40% per year in the cybersecurity sector as profits. And no matter what happens to the planet Earth or us, healthcare is very important. The healthcare industry, year in, year out, 20-25% never fails. That's the rock pillar, solid investment. Okay, we're looking at that. And the most exciting thing, which we have observed during the pandemic, is specialty retail. Very nice. Specialty retail, luxury retail, and now both combined into specialty retail, luxury retail plus metaverse is going to be a super exciting sector. That's going to be a 40% return on that sector. Specialty retail, luxury goods, and metaverse. It's going to be huge. Mark my word, it's going to be huge. And then you've got so much more e-commerce coming, whether virus, no virus. You've got people now so used to e-commerce, Lazada, Shopee, all kinds of things. So whenever you order these things from Lazada, Shopee, Taobao, Alibaba, they need warehouse space to store all your goods until they're shipped to you. The plane lands, the goods need to go to the warehouse first. One of the biggest strategies this year will be warehousing. And last but not least, like I said, we don't see oil going above $100 a barrel, but we do see oil staying above 80 when everything is settled, everybody is now back to normal. So we are still looking to make money from the energy sector, not so much as other sectors, but it's still part of our portfolio. So there you go. Let me recap for you. Quality
this
tech.
Is all very, very exciting, Ashwin.
Yeah, let me just recap.
It's very generous of you, to say all these, to tell us.
Quality tech made up of artificial intelligence, hybrid cloud, Internet of Things, wearables, and hardware. You've got electric vehicle component makers, you've got lithium miners, you've got financial institutions, you've got leisure industry, you've got cyber security, you've got healthcare, specialty retail, luxury goods, and metaverse. And then we've got the warehouse sector and the energy sector. So of course, I'm not going to go into specifics, because if you want to make money from these, give us a call.
When we know better, we do better. So that's where engaging you is such a crucial, critical aspect of our investment growth plan.
Yes.
So I'm so grateful that we are able to have this show and series of talks to help the retail investor. I think people who are rich know what to do. They have enough help. But people who are, who are in the bracket where banks don't even look at them, don't even look at us because we don't have the $5 million US. This is the bracket of people that we want to see prosper this year. And so if we know better, we do better.
So today is the second trading day of the new year. You heard it from the horse's mouth. Market drops, do not panic. Market drops 2 to 3%, do not panic. Market drops more than 5%, even better. You heard it from the horse's mouth. On the second trading day of the new year, I tell you this. Market drops 5% or more, even better. Smile, don't panic. But at the same time, plan. Can you afford 20% paper risk? 20% paper risk. Your risk reward ratio must be very important. And don't jump on that. Be honest with yourself. Can I afford 20% paper risk? Can I sleep well knowing I'm losing 20% on paper? Ask yourself the honest question. If you say I can't, then okay, we can't do it.
Well, I think we should also move aside from the scalping attitude to an investing attitude.
That is what I'm saying. Talk about the paper risk first. If you can afford 20% paper risk, don't have to scalp.
Instant gratification.
Yes. So you can scalp, meaning, listen to this. You can scalp, let me show you how. Intelligent scalping. So the trend is a $300 US trend. Okay, a stock is going to go up $300 US. So $300 US, right? So you bought the first wave you bought, it went up $50 US. So you take profit. You take profit. $50 US goes up, you take profit. Anytime it drops, you buy again. Goes up $50 US, you take profit again. So as you're riding the mega trend, you are putting some money in your pocket. That is not scalping. That is intelligent trading, high frequency. This is what we call intelligent high frequency trading. Scalping means $5, $10 in, out, in, out, in, out. No. You make $50 US, take profit. Any small drop, buy again. Now, I can talk to you like this in an informed position because I have an algorithm that looks at it from the top. The retail investor does not. I'm sorry, like I said, in 2022, don't say I can do it myself. You can do it yourself.
Fine. When I share with my friends what you just said, they say, "Oh, it's going to cost us so much in broking fees." So I don't think we'll
listen. Anybody on this planet, whether you pay us service fees or not, brokers survive on brokerage. No stockbroker is going to sell you a stock without brokerage. Because the broker need to process the transaction. What is broking fees, Cassie? It's 0.25%.
The profit actually overrides that small broking fee, which we must look at it from a bigger perspective.
This is where they must understand one thing. When they tell you this, tell them one thing. We're not looking at small trends. We're not looking at buying penny stocks. We are looking at mega trends. So when we say mega trend is $50 to $100 US per share, if you're going to make $50 to $100 US per share, what is 0.25 broking fee?
Yeah.
So you see, people don't see the logic. When you say broking fee, first ask yourself, what kind of reward are you looking at?
Yeah.
What kind of reward? If you're looking at $50 to $100 US per share at least, look at Microsoft. Since I bought for you, it has gone up. $120 US. So if you're making $120 US per share, would you bother about broking fee 0.25%? Come on.
No.
Let's be grown-ups here. So
I just have to say this, since I started trading with you, it's been a calmer, instead of that kind of anxious, it's calmer, and I feel like I'm in the controller's platform. I can look down from the mezzanine floor. I'm in control of my own decisions. I feel empowered. That is priceless.
I want to assure all retail investors watching this video, when you deal with us, you will be in control and you will be calmer. Yes. Because we can show you the picture from the top, which the normal retail investor cannot see. So I'm not blaming anyone. This is the price this is the reward you get for dealing with us. This is not just sign up. Let me scam you or whatever it is. So
this is a real investment.
This is a real investment. We feel for your investment because we know resources are not finite. Resources are finite. So we want to make those finite resources grow.
Yes. So thank you so much. How do we contact you, Ashwin?
My email is ashwin@ppchk.net. You can contact us at WhatsApp bit.ly/algo trader. For Telegram, it's bit.ly/algo factory. And of course, please do educate yourself for free on our YouTube channel. Subscribe to it, bit.ly/algo wealth.
Thank you so much, Ashwin. We'll be in touch very soon.
Thank you.